Morning traders, my Monday morning video here real quick. Like the video if you like it. Retweet me if you get a chance, and leave some comments below if I appreciate it and stuff. So it was looking pretty bleak there Friday. Basically, we had our put wall right here at 60.50. Had a big put wall right there. Early Friday afternoon, once we broke that, we went into negative gamma. And the issue we had is that the big institutions were so hedged coming into Friday. They put on massive hedging, and it gave them the opportunity to sell into strength. And basically, Wall Street banked big time Friday while Main Street got screwed. Okay. So that's basically what happened. And, basically all the elements were there and set up ahead of time. Uh, Everybody should have realized what was going on. That, basically everybody who'd bought all the calls trying to push into breakout, which at the same point in time, institutions were uh, selling premium out of the money premium up there at those highs, and so they banked on the call side. They were selling those calls, and then they also banked on all the hedges, massive amounts of puts that were bought into the market and shorts put in the markets for Friday, and so Wall Street managed to bank big time at the expense of Main Street. So just be very mindful of that. What actually happened. To finish uh, out these charts here real quick. I did want you guys. I haven't updated my charts for this week yet. These are the levels from last week because I wanted to show you that, even though it was Monday morning here. There's the daily 50 SMA right at this level as well here on uh, uh, the ESs. And I wanted to point out here, if anybody has ever known about the monkey bars, it's similar to volume profile. It's the default study from Thinkorswim. Uh, we all know that we've been trading in a volatility box, and we dropped back into that Friday. And you don't have to manually draw those out because the monkey bars, if you go on the 90-day time frame, will draw those out for you. So these monkey bars, really pretty accurate here, and we are currently inside the volatility box back again here on the VX futures. And I do want to point out we came right down to the point of control. And initially this morning, we are bouncing off that point of control. So technically, this is buy the dip until we lose this point of control area, in which we could very well do this week. But I'm just saying we are in a buy the dip mentality early on this morning, and we'll see if that holds or not. Uh, so be very mindful. Like I said, I haven't updated my uh, call walls and put walls yet. Maybe that is not a valid thesis, but I'm just saying from a technical standpoint, where we closed Friday, it's still technically by the dip. So I would definitely want to be mindful of that. With that being said, I want to go over here to the skew chart real quick. And what I want to point out here, so Wednesday we were putting in all-time highs here on the skew. And basically the skew is the measure of the ratio between the number of out of the money puts versus the number of out of money calls in the markets. And so basically there were a massive amount of out of the money puts in the markets. And uh, that hit on Wednesday and Thursday. Okay. And so now we are coming off that. Okay. And we've had a 12% retrace off of those highs as of Friday's close. So what we saw was some profit taking on the put side into the close on Friday. The price action is not reflecting it, but the skews actually showing us that there was a lot of profits taken off the table as these hedges came off Friday. Okay. So I do want to point out, and to me, that is I'm a little concerned that there was a greater profit taking on the skews than what otherwise should have been if we were actually entering into a bear market. So that's just something food for thought. I put these Fibonacci's on here from Wednesday's highs all the way down to the 50% is the normalized level, typical normalized level where skew should be. And we're already back right around the 60% retrace. So this looks like a potential blow off top on skew. So that actually adds a little credence to the buy the dip mentality possibly here. So just be very mindful of that scenario. Okay. Now let's go over to the NQs here. NQs, similar situation here, guys. Whoops, I got the wrong one here. Oh, I forgot one other thing. I'm going to go back over to ESs here. And I'm going to clean my chart up here real quick. Okay. So basically no studies on here. I'm just going to take all the studies off on this. Okay, clear. Yes. Okay, there we go. We're going to clear that up. And I'm going to go over here to my 3 CPRs. And we're going to zoom in here real quick. And so basically, we're currently, this here represents our weekly CPR high, CPR central, and low. This is our weekly range. So typically, if you're opening week below the weekly CPR, you have to have a slight bearish bias in the markets. Okay. So what I'm thinking here, this could be a dead cat bounce, but I would be looking for a back test of the central pivot. That's 60.73 right now for the weekly. Okay. So even if this is potentially a dead cat bounce, all the way up to 60.73-ish or something like that, I would still be looking to for a dead cat bounce top. Okay, so I definitely want to. That's another scenario. We are above on ESs. We're still above the monthly central pivot. Okay, so this on the bigger time frame is still a bullish pattern. Okay, this can fail at any point that it wants here, but like I said, the monkey bar is suggesting a potential buy the dip mentality here. So looks like to me we could potentially see a dead cat bounce. So we'll see what happens. Typical Mondays, though, are follow through Mondays off of what happens the Friday before. So, we got opposing views here, okay? Uh, but like I said, you know, just remember, we're not opening below this central pivot range. So you have to be really careful. I wouldn't be loading the puts down here. This looks like a very dangerous area to load puts until we get confirmation that we're actually breaking below the monthly pivot. So we really have to start accepting prices under 60.11 at this price point to be thinking that we might want to be adding to our short positions. Okay, so be very mindful and keep that in context. Okay, uh, very dangerous to be adding new puts with possibly the volatility being spiked really high here. It's more likely that you're going to see a lot of people coming in here selling put premium while it's elevated for a potential pop. So historically, okay. So I did want to point that out. Let's go over here now to the NQs. NQs here, guys. Let me change this over to default real quick. We'll do a similar situation here. So basically, we're quite a ways away from our monthly central pivot range. Okay, so we can still go quite a ways. We are below our current weekly central pivot on the bearish side of trend. Gets okay, so this could be wave one down, similar to S&Ps, and a wave two retrace we could be looking at. Right here at CPR, weekly CPR low, it could very well be it for the dead cat bounce. I mean, I'm telling you guys, that could be it for the dead cat bounce. The only thing I've got is that, we're right into this high volume profile node. So until proven otherwise, this is where buyers and sellers were content of trading prices. You know, I've found from experience, it's if you had to place odds, you're probably looking about 65, 70% odds. This is a bounce point versus a continuation. Given, and I don't know what the news is going to be today. I don't know. Like I said, I haven't looked into where the option pull call walls and put walls are at yet. But just be very mindful here. You got to be careful on the short side here. Okay. I'm going to go over here to this now. This is last week's. Let me clear my studies. So clean it up a little bit here. So we closed right here at the weekly 20 SMA. Okay. So there's different things that we got weekly 20 SMA as potential support. The daily 50 is right below it. So we have two very important moving averages right here, potentially acting as support. Over here in the monkey bars, we're potentially got support at this level as well. So we have to be mindful here. If you're trying to short this, you're shorting into a potential support area in the market. So be very careful if you're trying to do this. So be very mindful of that. Okay. Okay. Trying to help you guys out as much as I can here. Okay. Now the Russell. Here's something I wanted. Something quite interesting here. So we've come down to the daily 200 SMA. Okay. Also, we're at the neckline low on the Russell. So bottom line is we got a head and shoulders pattern. We're right at the lows of that neckline. In our volatility box, we're at the very low of that volatility box. If I was planning on any type of trade at all, given where we're opening at this moment, I would be trying to buy the dip at the volatility box low, than trying to short into the hole here on the Russell. Okay, you know, there's a lot of reasons. I'm not saying that's the trade to do. I'm saying the risk reward favors trying to buy the dip here versus trying to go short. Okay, so just food for thought. You guys can do whatever you want. Now, let me go over here and put my CPRs on here. Let's put the blank study. Okay, I've already got that. Okay, and the default. There, I cleared this up, and 3 CPRs. There we go. And now if we go over here and put our central pivot ranges on the chart, okay, guys, so we really got decimated there Friday. We have not even back tested weekly CPR low. Yeah, that's a pretty good odds dead cat bounce scenario. 2217 will probably back test at the minimum the CPR low. I mean that's pretty bearish if we can only back test this and we can't gain any traction at 2217. So you know at the very least, I would think that we're probably going to try to back test 2217. Now, I don't know. You know, it could get a lot. It could be a lot worse than what I'm thinking right now. But ideally, this being the worst, you know, if I were to try and do a dead cat bounce trade, you know, 2233 would be my ideal target area. 2233 here on RTY. I would be looking to take most of my profits off the table until proven otherwise. But you know, even then, you know, 2233, you're way down here on this volatility box, okay? And if you put your fibs on this volatility box, Fibonacci retracement, guess what? 23.6 lines right up to 22.33. So, you know, I kind of think that's very possible what's going to play out here because we have this confirmation for our central CPR, weekly CPR, you know, and you know we can definitely fail there. Okay, you know, I mean, but I'm thinking the dead cat bounce scenario is probably our primary thesis this morning. So I don't want everybody to run in, going short the markets. Oh my God, we're at the end of the world. Okay. Similar situation, possible dead cat bounce scenario here. So we do have a critical pivot here, down here. It's not nearly as pronounced as up here. Okay, so this was our primary pivot up here. This is not nearly as pronounced, but we do have a high volume node right here that we are initially bouncing off of this morning. Okay, uh, so definitely want to keep that in the back of everybody's mind. So, and we are still inside our volatility box. So, you know, nothing has really changed in the grand scheme of things on the diamonds. You know, it's, you know, buy the dip scenario because we're still in the volatility box. You know, I don't know if this is the place to buy or not. It's just something to think about going forward here. As far as the CPRs go, if I zoom in here on our CPRs, and you know, ideally, you're probably looking for a back test of 23,884 or 43,884. If you put your Fibonacci's on that, 43,884, And where's that put us? Basically, yeah, 38.2. Right here where this alert is, right here, that would be a back test of this alert area. Okay, guys. So there you go, and that's as it's a higher pivot. So basically, we this early this morning here, we're trying to defend a pivot that would put us up into this next pivot, which I don't have drawn out here. That would be a move back up into that other pivot to get us back into weekly central pivot for a back test. Bottom line is, if you guys are bearish to market, you want the weekly central pivot to fail. Okay. But doing a dead cat bounce to the weekly central pivot, that's fine. And we can actually go all the way up to weekly central pivot high and fell from there. Okay. But ideal in a more bearish market, even in the most bearish scenario of the market, we're really wanting to see a weekly central pivot failure. Okay, that's the ideal scenario for a dead cat bounce. Okay, so that's why I was saying you got to be very, very careful if you're trying to push the short side this morning. Okay, it's 3:24 a.m., so I can't even see what's actually trading live on the U.S. markets. But that's just some food for thought to think about, and hopefully this will help you guys in your trading today. But yeah, I would be very mindful of the dead cat bounce, like I said, and if you wanted to short, wait for a much better entry point than trying to short this out of the gate this morning. At least that's where we're currently pricing. By 9:30, we could be right into the targets that I'm mentioning. I don't know, but we'll see how it all plays out. Thanks a lot for listening.